Welcome back to the Motivated Mind Zone. Glad to have you here. Today, we're doing something a bit different. We're shortcutting really a masterclass in professional language. One of our listeners sent over this incredibly comprehensive stack of vocabulary lessons, just packed. And it's all designed for, getting fluent and precise in business, finance, and the legal world, too. But this deep dive isn't about like basic hellos. It's about getting the words that signal you get it. You understand what's happening in that meeting, in that contract.
Exactly. That's really the heart of it. We're
Mhm.
taking all this dense terminology
Mhm.
and distilling it down, making it usable, precise. It's not just about sounding smart, though that helps. It's about gaining real confidence, knowing, truly knowing the difference between, say, a tactic and a real strategy, or,
Okay.
or understanding exactly where your money is going.
And some of the history and legal bits in these sources were fascinating. Like we're gonna find out the military roots of a common word for headquarters, which actually says a lot about management styles, surprisingly.
Yeah.
And maybe most importantly, we'll really dig into what null and void means in a contract. Because people throw those terms around, but legally, while they mean different things about why something isn't valid.
Precision is absolutely key there. So we structured this to vet that fluency step by step. We'll cover three big areas. First, the corporate core think strategy operations. Then we'll shift into the money nexus, finance, banking, property, investing, all that good stuff. And finally, we'll tackle the legal and regulatory landscape, contracts, white-collar crime, consequences.
Okay, let's dive in. Section 1, the corporate core. The nuts and bolts of how a business runs. And maybe the most basic concept is making money, which brings us straight to the word commercial. Seems simple, right? But why is mastering both the adjective and the noun form so critical here?
Because context changes everything. And ambiguity in business, that can be expensive. As an adjective, commercial means it's about profit, about commerce. So commercial property, commercial viability, you're focused squarely on the bottom line.
Right. Makes sense.
But then as a noun, especially in media, a commercial is just an ad, a TV spot, a radio ad. So you could be designing a product for a commercial application.
The adjective.
Exactly. While your marketing team is filling a 30-second commercial.
The noun. Got it. Using the wrong one could definitely cause confusion.
Absolutely fundamental to fluent professional chat.
Okay, that clarity helps build the structure. Every big company needs a center of operations, its headquarters, or HQ. That's the main management hub, the admin center, decision central.
And here's where that military thing comes in. We often say head office or main office. Pretty standard. But the sources pointed out some more evocative synonyms: base, mission control,
Ah,
and nerve center. Using nerve center really implies this centralized strategic command, like a military operation. It emphasizes that HQ isn't just paperwork, it's strategic control over the whole organization.
interesting. So the word choice itself hints at the management philosophy.
Potentially, yeah.
Now, once that HQ is running, it needs to manage how the outside world sees it. That's public relations, PR. A lot of people think PR is just, spin, damage control, fluff.
But the professional definition is much more solid. The source material calls it a planned and sustained effort. It's about influencing behavior, building understanding, creating trust between the company and society, long term.
Sustained, not just a one-off campaign.
Exactly. It's about building reputation capital. If your PR fails consistently, the brand suffers, no matter how good the product is.
Okay, let's move inside the company. Planning documents. Now, agenda and strategy. People mix these up all the time.
They do. And professionally, you really can't. The difference is scope and timeline. Let's start with agenda. An agenda is usually short to medium term, pretty specific. It's got three main meanings. First, the obvious one, the list of items for a meeting, what we're discussing today, in order.
Standard meeting stuff.
Right. Second, it can be a general plan for the near future. What's on the agenda for this quarter. But the third, meaning that's the one with teeth. It's the underlying motive, the hidden plan.
Ah, the hidden agenda.
Precisely. Like, his agenda seems reasonable, but what's he really after? It implies unspoken intentions.
So agenda is tactical, maybe the next few months, whereas strategy, That's bigger picture.
Exactly. Strategy is the overarching plan, designed for a long-term goal. Think scope. Today's meeting agenda should support the 5-year company strategy.
Right, one feeds into the other.
Strategy sets the destination. The agenda maps out the steps you take this week or this month to get there. And that's why we have the verb, to strategize. That's the act of creating that big long-term plan.
Okay, makes sense. Now, to make that strategy happen, businesses often need to grow, which brings in words like branch. That's just a local office of a bigger company, right? Like a bank branch.
Correct. Simple enough. And the action is to branch out, expanding, moving into a new area, maybe a new market or product line.
And that leads to scalable. This word comes up constantly, especially with startups.
Oh, it's critical. If an idea, a business model, is scalable, it means it can grow. It can handle a much larger scale easily, efficiently.
Yeah.
For a startup looking for funding, saying your model is highly scalable is maybe the most important thing you can say,
Why is that?
because it signals huge growth potential without costs necessarily skyrocketing at the same rate. If it's not scalable, growth hits a wall fast.
Right, limited potential. Okay, now underpinning all this growth, contracts, legal agreements.
Yeah.
If you're looking at a contract, you need to know what a clause is, just a specific condition in the agreement.
Yep, a particular point or stipulation. But the really vital term we flagged earlier, null and void.
Yes. Tell us about the precision needed here.
It's a perfect example. If a contract is null and void, it means it's invalid, canceled, has no legal force. But the two words, null and void, actually carry slightly different legal weight.
Okay, how so?
Null means invalid, often from the very beginning. Think null ab initio. Maybe there was fraud, or someone wasn't legally able to sign. It implies it was never valid. It has zero value.
So flawed from the start.
Pretty much. Void means it's not legally binding. It might have been valid when signed, but something happened later to make it unenforceable, like the subject matter became illegal or became impossible to perform. It emphasizes the lack of current legal effect.
So by saying null and void...
You're covering all bases. You're
Yeah.
saying it was inherently invalid and it has no current legal power. It's definitively worthless, legally speaking.
Wow, that distinction invalid from the start versus becoming invalid later, that's exactly the kind of depth we need.
It's crucial in negotiations and disputes.
So what happens if someone breaks one of those contract clauses?
That's when accountability kicks in. And usually that means a penalty. A penalty is just a punishment for breaking a rule, a law, a contract term. Could be a fine, a sanction.
Synonyms like punishment, sanction, fine.
Exactly. And often in contracts, these are pre-agreed amounts called liquidated damages. We often hear the past participle. The company was penalized for missing the deadline.
And to make sure things are done properly inside the company, actions need to be authorized. Someone needs to give official permission.
Correct. And that official permission itself is the authorization. Often requires signatures, paperwork, especially in big companies. It's about proving due diligence.
Okay, let's step back out to the market. Companies need to know their customers. That requires market research.
Absolutely. Systematically gathering info on what consumers need, what they prefer. It's data-driven.
And that data helps build the brand, which is more than just the name.
Oh, much more. The brand is the name, plus all the recognizable stuff. Look, logo, colors, slogan, the overall feeling or ethos. Think McDonald's Golden Arches. You see them, you instantly know the brand anywhere in the world.
That identity needs protecting, which is where trademark comes in.
Right. A trademark is the officially registered name, symbol, logo. It gives you legal protection. You see the little TM symbol. That means it's registered. It stops competitors from confusing customers and protects your reputation.
And it's a verb, too, to trademark something.
Yep. We need to trademark our new slogan immediately. It's a key legal step.
Of course, having a strong brand means dealing with the competitive landscape. You have competitors.
Any other company going after the same customers or market share. The classic example is always Coke versus Pepsi.
Constantly watching each other, reacting to each other's moves.
Precisely. Their strategies are deeply intertwined.
Okay, let's wrap up this first section with a few more key operational terms. Startup.
A new business, usually in its first few months or years, often high risk, but aiming for high growth.
And they rely heavily on a forecast, a prediction of the future.
Yeah, predicting future performance, sales, costs based on current data and trends, essential for planning and getting funding.
And crucial for a startup, or any business really, is its USP, unique selling proposition.
This is fundamental. It's the one clear thing that makes your product or service different and better than everyone else's. It answers the question, why should someone choose you? What's your unique value?
Got it. Then there's best practice.
This refers to the generally accepted, most effective, most efficient way to do something to get the best results, often shared across an industry.
And finally, minutes. Not time, right?
Definitely not time.
Yeah.
In business, minutes are the official written record of a meeting. They summarize what was discussed, decisions made, actions assigned, who's responsible. They can be legally important documents.
Far more than just quick notes. Okay, that covers the corporate core. But none of that strategy or operation happens without money. Perfect segue to the money nexus. Let's start super basic. Money versus cash. Is there a professional difference?
There is, yeah. Money is the broad concept, the medium of exchange. Cash usually means physical currency, coins, banknotes. But professionally, it can also mean readily available liquid funds. Even small electronic transfers that clear fast. The distinction matters for, say, calculating a company's immediate liquidity.
Right. Now, central to how modern economies work. Credit. Getting stuff now, paying later.
It's fundamentally about trust, the ability to borrow. But that borrowing has a cost. Interest.
The fee for borrowing, or the money you earn on savings.
Exactly. Expressed as a percentage. And it's important to know if it's simple interest, just on the principal, or compounding interest, where you pay interest on the interest. Most loans and investments work that way.
And big loans have specific names. Mortgage for property, watch that silent T.
Then student loan for education, car loan for a vehicle, formal debt instruments.
How do we describe financial well-being professionally?
The sources give clear tiers. If you're financially secure, you're wealthy, rich, or maybe well off, living comfortable lives.
And the other end?
If you're struggling, you're poor, broke, or badly off, forced to live on a strict budget, often stressful.
Okay. Money flows out through tax to the government, donation to charity, and income comes in as salary or wages. What's the real difference there?
It's often a legal and contractual distinction. Salary is usually a fixed annual amount, paid monthly or biweekly, often for managers, professionals. Not directly tied to hours worked.
Right.
Wages typically mean hourly pay, or maybe piece rate, directly linked to time worked or output. Common in retail, manufacturing. The difference impacts things like overtime pay rules.
And if you do well, you might get a bonus, extra pay on top.
Yep, often discretionary, not guaranteed like salary.
Okay, let's get into banking mechanics. Opening a bank account, need ID, proof of address, fill out forms, standard stuff.
Pretty standard. Then you have basic transactions. Withdrawal, taking money out, or just take out.
And lodgement, that's putting money in.
Exactly. Or lodge or put into. Depositing funds, the amount you have in the account at any time is your balance.
And the danger zone, the overdraft.
Right. Spending more than you have, your balance goes negative, you owe the bank. To clear that debt, you need to get it paid off. That phrasal verb means settling the debt completely.
Banks love automation now. We need to sort out the different payment types. Credit transfer.
That's usually a one-off direct payment, like paying a specific invoice electronically, from your account to theirs.
Okay. Then the tricky pair, direct debit versus standing order.
Crucial difference for managing your money. A direct debit is permission you give to a third party, like your utility company, to take money from your account. They control the amount and the date, usually for bills that vary.
So they pull the money.
Right. But a standing order is an instruction you give to your bank to send a fixed amount to someone on a regular date. You control the standing order. The company controls the direct debit. Big difference in control.
Got it. That's a really clear distinction. Let's pivot to credit cards. Borrowing, basically. We know the balance is what you owe, the credit limit is the max you can borrow, but the killer metric is APR.
Annual percentage rate, yes. This is the true cost of borrowing per year. It's not just the interest rate. The law says APR must include most fees, application fees, annual fees sometimes. It standardizes the cost, so you can actually compare different card offers fairly. A low headline rate can hide high fees, meaning a high APR.
Super important to look beyond the advertised rate then.
Absolutely. And check if the rate is fixed, stays the same, or variable.
Variable means it can change.
Yeah, it's usually tied to an index like the prime rate, so your payments could go up or down. Watch out for low introductory APRs, too. They look great, but they jump up after a few months.
And fees. Annual fee just to have the card.
Sometimes. Plus transaction fees for certain things, like using it abroad or getting cash.
Yeah.
You always have to pay the minimum monthly payment, usually a tiny percentage, like 2% of the balance.
Just paying the minimum means you're in debt for a long time, though.
Oh, absolutely. The interest racks up fast, miss that minimum payment, and you get hit with a late fee.
Is there any breathing room?
Yes, the grace period, usually 21-25 days. If you pay your previous month's balance in full, you won't be charged interest on new purchases made during that period.
Ah, but only if you cleared the previous balance.
Key condition. But debt can spiral. Default is when you fail to make payments as agreed. That triggers a much higher interest rate, the default rate, and it tanks your credit score.
And a big warning sign. Cash advance. Getting cash from your credit card.
Avoid it if you possibly can. The fees are usually huge, and interest often starts accruing immediately. No grace period for cash advances. Very expensive way to get cash.
Yikes. Okay, let's shift gears to real estate, the big one. The mortgage.
A long-term loan to buy a property using the property itself as security, as collateral. Your payments cover principal, the amount you borrowed, and interest.
And you mentioned amortization. How does that work exactly?
It's the schedule of how you pay off that principal and interest over the loan term, say 30 years. But the crucial thing professionals often miss is that it's heavily front-loaded with interest.
Meaning?
In the early years of your mortgage, most of your payment goes just to cover the interest. Very little reduces the actual principal you owe.
Wow. So it takes a long time to build up ownership stake.
Exactly. That ownership stake is called equity. It's the difference between the property's market value and what you still owe on the mortgage. Paying down principal builds equity faster, and equity is what you can borrow against later, maybe with a home equity loan.
Okay. So buying a place involves a down payment, the initial cash.
Right. And the bank needs an appraisal to confirm the property's value. It's smart to get PRAILs. Pre-approval for a loan before you start house hunting. Tells you how much you can borrow.
And don't forget closing costs, all the extra fees at the end.
Yep, lawyer fees, title searches, transfer taxes can add up to 3-6% of the loan amount easily. Budget for those.
And if your down payment is small, less than 20%.
You'll likely need PMI, private mortgage insurance. It protects the lender, not you, if you default. It's an extra cost.
Plus title insurance protects against past ownership problems.
Essential. Protects both you and the lender against claims or liens from the property's history.
Okay, what if you're not buying? Renting. That's governed by a lease agreement.
A legal contract between the tenant, renter, and the landlord owner. You pay a security deposit up front.
Against damages.
Right. Tenants usually pay utilities, water, electricity, and people look for amenities extras like a gym or pool.
Can a tenant rent out their place to someone else?
That's subletting. Almost always needs the landlord's written permission first. Check the lease.
And if the tenant breaks the lease rules,
The landlord can start eviction, the legal process to remove the tenant.
okay, zooming out again, investments and the wider economy. Stock market. You buy stocks or shares.
Which represent ownership pieces of a company. You might get dividends, which are profit distributions to shareholders.
And all your investments together are your portfolio.
Right. And the market has moods. A bull market means prices are generally rising, investors are optimistic. Think charging bull.
And the opposite.
A bear market. Prices are falling, pessimism rules. Think hibernating bear. Often signals an economic slowdown.
Beyond stocks, there are bonds, basically loans to a company or government.
Correct. debt securities, and commodities, physical goods like gold, oil, wheat, tangible assets
And the big new player, cryptocurrency.
like Gitcoin. But the tech behind it, the blockchain, is maybe more important.
Explain blockchain again briefly.
It's a shared, unchangeable digital ledger, records transactions across many computers, so it's very secure and transparent. Its uses go way beyond currency supply chains, voting systems, secure records.
And you need a digital wallet to hold your crypto keys.
Yep, proves you own the assets.
Okay, basic economics. Supply and demand. That drives prices.
Fundamentally. And we watch two big forces, inflation prices generally going up, measured by the CPI, Consumer Price Index.
Versus deflation. Prices generally falling, which sounds good, but can be bad for the economy.
Often signals weak demand, potential stagnation. Companies stop investing if they expect prices to fall.
Who manages these forces?
Two main players. The government uses fiscal policy, its spending and tax levels. And the central bank uses monetary policy, adjusting interest rates and the money supply. They're distinct tools managed by different bodies.
And the big measure of a country's economy, GDP, gross domestic product.
Total value of everything produced. If GDP shrinks for 2 consecutive quarters.
That's the technical definition of a recession.
Exactly. A significant economic downturn. Okay, now we connect business and finance to the law. And here, precision is absolutely paramount. Legal definitions determine everything.
We need to be crystal clear. Let's start with violence. Assault versus battery. Often confused.
Very. Legally, assault is the threat or attempt to injure someone. It creates the fear of immediate harm. You don't have to actually touch them.
So shaking your fist menacingly.
Could be assault.
Right.
Battery is the actual unlawful physical contact. Harmful or offensive touching, landing the punch.
So threat versus action, they're often charged together, though.
Yes, as assault and battery. But they are distinct offenses.
Similar confusion with property crime, burglary versus robbery.
Key difference: presence of a victim and threat. Burglary is breaking into a place unlawfully with the intent to commit a crime inside, usually theft. Critically, the victim doesn't need to be there. Breaking into an empty house at night is burglary.
Okay. And robbery.
Robbery involves taking property from a person by using force, violence, or the threat of violence. The victim has to be present and threatened or harmed.
Mugging someone on the street.
That's robbery. Breaking into their empty office later. Burglary. The threat or violence against a person is the key for robbery.
Got it. Let's shift to white-collar crime, common in professional settings, embezzlement.
This is a crime of trust. It's when someone is legally entrusted with money or property, and they fraudulently take it or use it for themselves, like a treasurer stealing club funds. They had legal access, but abused it.
Okay. And bribery.
Offering or accepting something of value, cash, gifts, whatever, to influence someone's decision or action improperly. Usually involves public officials or employees aiming to corrupt a process for personal gain.
Right. Now the most serious crime, homicide. Killing another person.
And as you said, not all homicide is criminal. Self-defense, for example, can be justifiable homicide.
But when it is criminal, we have degrees of murder. First degree.
The most serious. It requires intent to kill plus premeditation, meaning the killer planned it, thought about it beforehand.
Deliberate and planned.
Yes. Second-degree murder also involves intent to kill, but lacks that premeditation. The intent might form suddenly, in the heat of the moment, but it's still intent to kill.
Below murder is manslaughter, still illegal killing, but different intent.
Exactly, it falls short of murder. Two main types. Involuntary manslaughter. This is causing death through criminal negligence or recklessness. No intent to kill, but your actions were dangerously irresponsible. Drunk driving causing a fatal accident is a common example.
Okay. Involuntary manslaughter.
This happens, often called in the heat of passion. There's an intent to harm, maybe, but it's triggered by extreme provocation that clouds judgment. Less culpability than murder because the premeditation or malice is arguably missing.
Complex distinctions. Other major financial crimes.
Broad. Basically, intentional deception for financial or personal gain covers a huge range of activities.
And identity theft. stealing personal data to commit fraud.
Using someone else's info name, bank details, social security number for illicit purposes.
Right.
And the sources gave us some great synonyms for the people who do this. Fraudster, scammer, con artist, swindler, and my favorite, gouger.
Huh. Gouger, love it. Now, if these crimes generate a lot of illicit cash,
They need to clean it. Money laundering. Making dirty money look legitimate. It's about disguising the illegal origin of funds by passing them through complex transactions or businesses.
usually involves 3 steps: placement, layering, integration.
That's a classic model. Placement, getting the cash into the financial system. Layering, complex transactions to hide the trail. Integration, the money comes back appearing clean.
Okay, the legal process itself. Jail versus prison, what's the difference?
Generally, jails are local facilities. For short sentences, usually under a year, or holding people awaiting trial. Temporary. Prisons are state or federal. For convicted felons serving longer sentences over a year. More permanent, higher security.
The process starts when police charge someone, formally accuse them.
Right, that's the verb and the noun. And a victim can decide to press charges, meaning they want the state to prosecute.
In court, lying under oath is
Perjury, a serious felony. Knowingly making false statements while sworn to tell the truth attacks the whole justice system.
and disobeying the court.
That's criminal contempt of court. Ignoring court orders, being disrespectful, disrupting proceedings. Judges don't take kindly to it.
Now, for real fluency, especially in meetings, we need those professional idioms, the shortcuts.
Yes, the aha moments. They bypass formal jargon. Let's hit 4 common ones.
Yeah.
If a project fails badly, you might have to go back to square one.
Start all over again from the very beginning.
Exactly. And when facing a complex issue, someone will say, let's look at the big picture.
Meaning the overall context, not just the small details.
Precisely. And if you suggest something disruptive in a conservative company,
You might be told not to rock the boat. Don't upset people. Don't cause trouble.
right, maintain the status quo. And finally, the bane of bureaucracy, red tape.
All those excessive, frustrating rules and forms that slow everything down.
Perfect description. And that phrase literally comes from the red ribbon or tape used to tie up official documents centuries ago in Europe.
No way.
Yeah, an administrative habit that became a symbol of delay and obstruction.
Okay, let's zoom out one last time. The wider professional world. Industries. How does American English categorize them?
There are standard groupings. Foundational ones like manufacturing, making physical goods, mining, extracting resources, agriculture, farming, fishing, forestry, primary production.
Then moving goods. Wholesale trade versus retail trade.
Key distinction. Wholesale is selling in bulk, usually business to business, B2B. The buyer, like a shop, intends to resell it.
Lower prices, bigger quantities.
Typically, retail trade is selling directly to the end consumer, B2C, smaller quantities, often higher margins per item, different business models entirely.
Then the specialized sectors. Professional, scientific, and technical services.
High expertise fields. Think architects, lawyers, accountants, consultants. Knowledge work, often certified, commanding higher fees.
And the catch-all. Other services.
Yeah. It's everything else.
Right.
Repair shops, dry cleaners, hair salons, dating services, even parking lots. The essential but miscellaneous support functions of the economy.
Okay. Given how work has changed, we need the home office lexicon. More than just desk and chair.
It's about setting up a professional space.
Yeah.
Little things matter. A chair mat to protect the floor. A filing cabinet for organization and compliance. A whiteboard for brainstorming. And the crucial webcam for virtual meetings.
These signal a proper work setup even remotely.
Exactly. Shows commitment to efficient work.
But the vocabulary dominating everything right now. Artificial intelligence, AI. We need the core terms. Not just names, but what they do.
Absolutely. Start with the basic building block. The algorithm. A set of step-by-step instructions for a computer. Then machine learning, ML. That's a type of AI where algorithms learn from data. They get better over time without explicit reprogramming for every scenario.
Like recommendation engines.
Perfect example. Or fraud detection. Next, neural networks. These are AI systems inspired by the human brain. interconnected nodes processing information in layers, more complex pattern recognition.
And NLP, natural language processing.
Crucial for business.
Yeah.
Enables computers to understand and generate human language. Think chatbots, translation tools, analyzing customer feedback.
Okay, two more advanced ones. Deep learning.
Uses very complex, multi-layered neural networks. Powers things like advanced image recognition, medical diagnosis, autonomous driving. Tackles highly abstract problems.
And data mining.
This is the process of sifting through huge data sets to find patterns, trends, useful insights automatically. Discovering things you didn't know to look for. Feeds back into strategy.
Got it. Okay, one final piece of context. Time and ceremony. U.S. federal holidays.
Right. These affect business schedules. Non-essential federal offices close. Workers get paid time off. Part of the professional calendar.
Let's highlight a couple. The newest major one. Juneteenth, June 19th.
Yes. Celebrates the end of slavery in the U.S. Specifically, the date news reached enslaved people in Texas in 1865. Its recognition as a federal holiday is a significant recent development.
And Labor Day, first Monday in September.
Honors the labor movement. But culturally, it's the unofficial end of summer. Big retail sales weekend. Marks a shift back to business focus for the fall.
And of course, Thanksgiving in late November. Big family meal, parades, football.
A major holiday pause.
Yeah.
And New Year's Day, the countdown, the celebration, setting goals for the year ahead, #tag outro. So wrapping up, I think we really hit that goal of shortcutting the masterclass by zeroing in on precision. We saw that real fluency isn't just knowing words, it's knowing the exact meaning in context. Like strategy versus agenda, or understanding the heavy front-loading of amortization, or knowing that null and void precisely covers both inherent invalidity and lack of current legal force.
Absolutely. You should now have that core lexicon to really talk shop with confidence. Whether you're discussing APR and equity in finance or talking about best practices and navigating red tape at work, you're much better equipped now to handle the corporate core, the money nexus, and the legal landscape.
Maybe a final thought for you to chew on, building from today's dive.
Yeah.
We covered a lot of very specific white-collar crimes, embezzlement, bribery, complex fraud types, money laundering. Does the sheer complexity and, frankly, the specialized nature of modern business and finance, does that itself inherently create maybe more subtle opportunities for illegal activity compared to simpler economies in the past?
Does complexity breed new kinds of vulnerability? That's a really interesting question to ponder. Definitely something to think about as you continue your own explorations. That's all we have time for in this deep dive. Thanks for joining us in the